Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, a little bit after 1 o'clock. We're going to take a look at the S&P 500 chart after I remind you the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. First, a very broad view of the S&P on a weekly chart. Each one of these candles is a week, and you see we closed at 33.97 for the week. That is an all-time weekly high. The previous weekly high we had was 33.80, and that was back in early February. So all of that fear has now been pretty much overcome, and then a hair more by I believe rational thought. So, but let's take a look at things now on a daily chart. So that's an all-time weekly high. And obviously, if we look at it on a daily chart, this is going to be an all-time daily high. That goes, I think, probably without saying. And then if we look at it on a 30-minute chart, there we see, I thought that was going to be a bear flag here between these two lines. So I'm going to make a change because now it looks like this may be what we got going on right here. So it really can't be a bear flag at this point because we are higher than where this where this drop took place on the 19th. So I don't think you can say that's a bear flag now, but what you can do is look at it as a potential channel, possibly with a slightly constricting form to it, which means it could be sort of another but smaller rising wedge. And that's the thing that's interesting here, is because I'm still pretty convinced this is a rising wedge. So what is this? Usually you fall out of the wedge and you start to head pretty much straight back down. Well, in this case, no. So I'm thinking still this wedge this week reveals itself in some form or fashion, and perhaps we even make it up over 3,400 and then encounter some selling pressure. Remember, a wedge often will be back tested just like any other pattern. And sometimes the apex of the pattern, in this case, that would be up here around 3450. That also could be an area to watch very closely if that's where we end up at some point this week. And really, we could very easily. That's only about 1%, 1.3, 1.4% from where we are right now. No, I take it back. A little bit more than that. It's just call it 1.5%. So that would be something that we could do fairly easily. I did note that during this week it was interesting that we had this little pattern here that looked like it might be a bull flag. It did break out, a little back test, but then we started to get underneath this line here, which is the rising wedge support line. And interesting that our bounce on Thursday took place exactly, almost to the penny on this line right here. So kind of an interesting week. As we look at this potential rising wedge, we put that little midpoint line on there, which is something I like to do. And you see we have all kinds of little reactive moves right around this line. So that just kind of, to me, at least for me, hammers home that, yeah, this is a rising wedge, and we are going to, in all likelihood, come back down to at least, I think, we have a chance at gap support here and gap support here, but if the wedge does its thing, we should get down around 3,200 or even into the 3,100s at some point. So 7 to 8% off from where we are right now. 6 to 7. Let's call it that. I'm not sitting here with a calculator. I'm just kind of eyeballing it, and I'm just good enough at math to where I can get myself in trouble by eyeballing it and pulling a number out of my head, shall we say. Anything else really to talk about this week? Well, like I said, we did reach that all-time high. We did it on Wednesday and then fell back down sort of precipitously. But then we recovered and we find ourselves back to that spot. So I think with that in mind, we might throw one more line up on this chart on the short term here, just in case this ends up being some kind of little topping pattern here. It could. I don't think it would. It wouldn't be a head and shoulders top, but it could be kind of a double top. Again, all depending upon how things pan out early this week. I tried to draw a line. Why didn't it? So, in other words, if we get under this line right here, if we were to break out of this pattern, say early this week, before setting anything really substantially higher, and we take this out, then I think that tells us to expect, by itself, to expect a move down to test the low 3300s. Of course, at that point, the wedge will have broken down more, and we would not only be looking for 3300s, but again, 32s, even 3100s, just based on what's on the chart in front of you here. Remember this line down here at around 3153, 3154, that is the extended neckline from that really large inverted head and shoulders pattern that I don't think is really a factor anymore. I could be wrong, but because we got down so much lower than the inverted head, it just it doesn't look to me like the psychology. Well, I take it back. This is still revealing something of a bullish psychology, but I think all of this right here sort of obliterated some of this impact back here. So with that said, I would be looking at some point this week for some weakness, again based on this wedge, even though we are at an all-time high. So we'll just leave it at that and say thanks for taking time out of your week to watch this, and thanks for your support. Take care.